why should the US Treasury yield curve flatten out from 15 to 16? Because the Fed has hiked rates, okay, but they're not saying they're going to hike rates more. The Fed, if you saw the Fed balance sheet, it's not shrunk, right? And the Fed is saying, I'm going to hike rates because I'm seeing growth and I'm finding inflation okay. So what happens when growth and inflation is there? Steepness. Why should there be steepness in yield curve? Because the markets expect the short end. Basically, if the 10-year yield is at higher than the 1-year yield, the markets expect the 1-year yield to go to the 10-year yield going forward. That's why the steepness is there, right? But when there flatness, what happens? The 10-year and 30-year will come down, but the 1-year and 5-year yields have gone up, right? Actually, 1 year and it's 3 months and 1 year and 3 or 2-year yields have gone up sharply. But this was holding on for a while. I'm not saying it's going to happen this year, but the flatness is a big worry. Okay, there is absolutely no reason for the curve to flatten if markets are expecting a growth and inflation. But if markets are not expecting growth and inflation and still the Fed is hiking, then the Fed has got a problem and the markets have a problem. It's a big problem. Unless it's a huge amount of segmentation. Unless there could be another reason, okay. It could be global central banks or global investors coming out of negative yields and buying into whatever yield is available in the 10-year and 30-year treasury. They don't want to buy the short end because Fed is going to hike the rates, but they don't mind getting whatever is available. So it could be pension funds globally buying treasuries. That's also a plausible reason, okay. And if that is the reason, then there's nothing great to worry about, okay. But the reason, if the markets are not believing that, but typically even the markets will, even investors will demand higher yields if they believe there's going to be growth and inflation, right? So they're not. So if it's either a case where money is just chasing whatever yield is available, and if that is the case, then everybody will be rushing to buy the 10-year G-Sec, right? But or it could be a case where the markets are completely disbelieving the Fed's reading of economy. And if that markets disbelief is there, it can maybe continue, the flatness can continue for a while. It could maybe continue for 1 year, 2 years, right? But what will happen is asset price will continue to build up, bubbles will continue to build up. At some point of time, it will burst. So you can see a build up happening of asset prices.